Whoever not used your smartphone in a day? I believe that most of you will say, oh my god, it's not me. I could not live with my gadget. Yeah, because right now the smartphone could be used for many things, starting from chatting, texting, uploading the video, taking the photo, playing games, and even paying something. 20 years ago, handphone was a prestigious technology, even though it was heavy and only black and white. I could only text using SMS at the time and also play snake games. Technology changes and develops. It shows that technology is changing and developing. It doesn't affect only a sector of our life but many sectors of our life, including financial sector. I remember when I go shopping with my friends often ask me and my other friends, do you bring cash? But I and my other friends mostly answer, no, we don't bring any cash since I am cashless. I could pay anything right now from my gadget. I have the application to pay and the merchant have their application to receive the payment. It was so different with several years ago when we have to bring cash and pay in cash since there was no application to pay and also there was no application to receive payment for the merchant. Not only related to payment but several financial activities also could be done digitally, such as investing, signing up for investing, lending something, and many more. Therefore, digital finance is an interesting issue to learn because it won't stop here but it is constantly or exponentially growing in the future. What is digital finance? Digital finance is the delivery of traditional financial service including the product or service, the process and also business model through the use of new technology. Everything we did traditionally in the past is transformed into digital right now. Besides following the development of new technology, why should digital finance be implemented? The first one is to increase financial inclusion. Note the word financial inclusion. Financial inclusion is the availability of an adequate range of safe, convenient, and affordable financial services to everyone. Underline this, to everyone. Using traditional financial services, some group of people are underserved. They cannot use most of financial services since it is not available for them. For example, people living in the rural area. While people in the city could easily transfer their money using ATM, people in the rural area could not do that since the ATM machines is not available there. It is hard for them to access for credits since they have to go to the bank and the bank is not available in the rural area. They have to go to the city, go to the bank and apply for credit. How about investment? At the time when you want to invest, you have to go to investment company office and then you pay something to invest. Of course, it will be hard for people in rural area. They have to go to city first, go to the investment company office, sign up and pay for investment. If they want to top up their investment, they have to go to city again, top up for investment. It will be costly, right? Therefore, through digital finance, the government wants to increase financial inclusion, so there are a lot of financial services that could be experienced by everyone, not only people in the city, but also the underserved market. The second one is to improve efficiency of financial system. Using digital finance or financial technology, you can easily invest using your smartphone. You can easily paying using your smartphone. In the past, when you want to transfer something, you have to go to ATM, automated teller machine. It will be costly, right? And then you transfer something. But right now, you can directly transfer something through your phones. It will make the consumer having easier access to financial services. Not only that, there are also several digital financial services for business, such as the accounting software that could reduce the cost and improving the financial performance of the company. Comber et al. Created Digital Financial Cube like this. Based on this cube, there are three aspects of digital finance. The first one is Digital Finance Business Service. The second one is Digital Finance Institution, and the third one is Digital Finance Technology. The digital finance business function is like digital payment, digital financing, digital insurance, digital money or currency. And digital finance institution consists of traditional service provider and also fintech company. And digital finance technology could consist of blockchains, P2P technology, and many more. Based on fintech news, these are several digital financial services that is available in Indonesia. Wow, so many, right? After knowing what is digital finance, let's talk about what are the benefits and what are the challenges of digital finance. The first benefit is enhancing customer experience. Yes, it's more personalized, tech-savvy, and they can access everywhere. The second one is improve operational efficiency. It is faster, save time and also cost, and also reduce human errors. The third one is insight-driven decision. You don't need to handle large amount of data by yourself, but you can use the technology, and even the technology will provide you with the result. For example, your business wants to create financial statement. There are a lot of transactions occurring in your business. Of course, to create it by yourself, it will take time. And sometimes we can do human errors. By using accounting software, which is one part of digital finance, the system itself will handle a large amount of data and provide financial statement for you. It is easier, right? And what you need to do only taking insight or taking decision based on the financial statement that has been provided. The fourth one, of course, higher market serve. As I mentioned before, using digital finance, the government want to increase the financial inclusion, so the underserved market could be served. Using digital finance, they can experience financial service using technology in the smartphone. Even though there are a lot of benefits of digital finance, there are also several challenges in digital finance. The first one is digital divide. There is a gap between regions or people or gender to access the technology. Some region is still not penetrated by internet, therefore it is hard for them to access the internet. The second one is about financial literacy. Financial literacy is different with financial inclusion. Financial inclusion is the availability of financial service. So there are a lot of financial service that is available. Financial literacy is how people can understand to use the financial service. That's the financial literacy. In 2019 in Indonesia, the financial inclusion rate is 76.2%. while the financial literacy rate is only 38%. It shows that even though there are a lot of financial services available in the market, but still there are a lot of people who don't understand how to use this financial service. The third one is shorter term profitability. If you know there are a lot of financial service that is still burning money to penetrate the market. They get lost for several years to give the education to market or promote their financial service. Of course, it will be hard time for the financial service in the short term. Therefore, they have purpose to having short-term profitability. The last one is about data privacy. It is about public perception of data privacy. Some of them are worried when they sign up and then the data is stored by the financial service company and it could be hacked by the other people. So they feel they are not secure, they are worried and don't want to sign up for financial service.